Also, given the uncertainty which these tariffs have brought into, there has been a deferment of decision making by corporates. The impact of these tariffs on global economy and equity markets will depend on. We are now trading sub 20 times, which is lower than the 10-year averages. India's goods trade balance with US is much smaller as a percentage of GDP compared to say other emerging markets. We believe that India from a relative perspective will be much better placed. Indian markets continue to provide superior opportunities to the global investors.
From Trump's tariffs to interest rates, all these factors have been weighing heavily on equity markets globally. What's the way forward, especially for India? To discuss this, I have with me Ankit Sancheti. He is the investment manager with Kotak Mahindra Asset Management Singapore Private Limited. Hi, Ankit. And let's start off first by discussing Trump's tariffs. He's imposed them on Mexico, Canada, his immediate trading partners, and as far as China and possibly on India as well. What's the kind of long-term impact do you think these tariffs could have?
Sure. So far as Trump's tariffs are concerned, and specifically as they are being targeted towards key global players like Mexico, Canada, China, and potentially India also, it's an indeed a point of worry in from a near-term perspective. Also, given the uncertainty which these tariffs have brought into, there has been a deferment of decision making by corporates. However, if one needs to look at from a longer term perspective, the impact of these tariffs on global economy and equity markets will depend on the extent and the nature of these tariffs. If the tariffs are levied on a large scale and affect key sectors like IT, technology as a sector, automobile, manufacturing, it can create a drag from a global economic growth perspective.
How vulnerable is India to tariffs coming in from the United States?
Okay, so from an India perspective, if I look at in the context of the goods exported by India to the US, there are certain sectors which can get impacted. Sectors like steel, aluminum, pharmaceutical, to some extent textile, and there are certain agriculture products. If the tariffs are imposed by US, they will have an impact from an overall perspective as so far as India is concerned. However, if I look at India's goods trade balance with US is much smaller as a percentage of GDP compared to say other emerging market countries like China, Mexico, Vietnam. And as a result, we believe that India from a relative perspective will be much better placed. If I look at from a services exports perspective, so far, at least at this point in time, we don't see any untowards movement by the US government so far as an IT exports are concerned. And so far, and to that extent, we don't believe that services are going to get impacted.
Of course, we've seen that drop in equity markets come by, but considering that we were looking at very lofty valuations, do you think this drop is perhaps a blessing in disguise? And perhaps now that this fall has come in, there are certain pockets of the market that look attractive in terms of pricing and valuations?
So if I look at the equity markets in India, MSCI India index is down roughly 19.5% in US dollar terms in the last 5 odd months. And if one look at MSCI India mid cap index, it is down close to 23.5% for the same time frame. Now, before I dwell into what has been from a valuation perspective, if we take a step back and understand what are the key reasons why markets have seen correction, I think the starting point has been a weak macro print. If you go back the quarter of September 2024, the GDP print of India came at 5.4%. And there are a couple of reasons why we have seen a slower growth in Indian economy. First and the foremost has been slower government expenditure. If you look at government expenditure on the capex side, it has been on a declining trend basis in the first 6 7 months of the current fiscal year. If you see from a consumption perspective also, there was a bit of a slowdown in the urban consumption, and rural recovery from a consumption perspective has been slower to pick up. The other perspective of macroeconomic drag has been, I will say, on the RBI side, on the monetary policy side, we have seen liquidity tightness in the system. There, we have seen banking system going slow so far as so far as credit growth is concerned. On top of it, in the last 1.5 2 months, there has been uncertainty surrounding the Trump's tariffs, the tariffs getting imposed on India. There was a volatility from a currency perspective also. So combination of all these things have resulted in a softer economic backdrop, and that has resulted into correction in the Indian market. Another pain point for the pushback by the foreign investors has been on the valuation side, and that too, if I look at from the September odd levels when the market had hit the peak, from today we have seen market valuations also correcting. If I look at the Nifty as a benchmark, on a 12 months forward perspective, we are now trading sub 20 times, which is lower than the 10-year averages. So if I look at from a valuation perspective, markets are now coming at a reasonable level.
Well, considering that we're seeing a shift in dynamics in almost everything from business operations to foreign investors, how do you advise investors to approach the Indian markets?
Okay, so while there are uncertainties surrounding global trade, economic conditions, I still believe that Indian equity markets continues to present significant opportunities. So while there has been a drag on the overall economic growth in 2024, as we look forward for 2025, we believe that a lot of those drags are getting addressed. First and foremost, if I look at from a monetary policy perspective, we have already seen first rate cuts by RBI in the month of Feb, and that was a rate cut which has happened after a gap of 5 years. The liquidity in the banking system has been on an improving trend basis. The volatility, so far as currency has been concerned, has also got arrested. And if I look at from a union budget perspective, also government has given has reduced the individual tax rate, which in turn will result in higher disposable income in hands of consumers, which we believe will lead to better consumption as we move into 25 and 26. As I said previously, valuations have also corrected to below long-term averages. And given everything in context, I believe that if investors have medium to long-term perspective, Indian markets continue to provide superior opportunities to the global investors.
Well, we're certainly at an interesting juncture when it comes to almost everything for the equity markets. Ankit, thank you so much for breaking down all of these factors for our viewers. And thank you for joining in. Hope you found this video insightful. Don't forget to hit the like button and subscribe to Kotak International.